In this particular planning activity, our reference would be PSA 315, understanding the entity and its environment and assessing the risks of material misstatement. According to PSA 315, the objective of the auditor in this part of our procedure is to identify and assess the risks of material misstatements, whether due to fraud or to error, at the financial statement and assertion levels, through understanding of the entity and its environment, including internal controls, thereby providing a basis for designing and implementing responses to assess risks of material misstatement. So this objective now highlights or emphasizes the process that we follow in audit, which is what we call the risk-based audit process. So remember, under the risk-based audit process, so the first phase is to assess the risk of material misstatement for us to be able to develop our response. So in this case, what is being asked of us is to assess the risk at two levels. One is the financial statement level and another is the assertion level. So when we say financial statement level, so that means we are assessing risk related to the environment on which the financial statements are prepared. So like for example, we have to understand what factors can affect the financial reporting process or quality of the information that will be put in the financial statements of our client. So like for example, the nature of the entity, the competence of their management, the integrity of the management. So those are the factors that we are considering at the financial statements level. When we say assertion level, so that is the time that we are looking in the actual content of the financial statements itself. So remember, management has several assertions about their financial position, performance, and cash flows contained in the financial statements. So therefore, the type of the accounts, the type of the transactions that they process would affect the risk that we assess on the assertion level. So next, so we mentioned that we have to understand the client business and its environment, but what specifically should we understand as auditor? So as auditor during planning, we have to obtain knowledge about number one, the general economic and industry factors that affect our entity. Then number two, the nature of entity's business. So number three, their financial performance and condition. So number four, reporting requirements and any changes to those reporting requirements. And number five, general level of management's competence. Now, how do we understand or what will be the sources of our understanding regarding this item? So the sources of the auditor's understanding are as follows. We can use our prior audit experience with our client or other client from similar industry in understanding the business of our current client. We can also discuss with people within the entity, their officers, management, even those charged with governance, and other personnel, so relevant to our understanding of their business. We can also discuss with internal auditors and review their internal audit reports, so to determine or to assess how controls affect the financial information processed by the company's information system. So we can also discuss with other auditors, with legal and other advisors of the entity to understand more the nature of their business and other aspects of their business. So we can also discuss with knowledgeable people outside the entity like economists, regulators, suppliers, competitors, customers, so to understand more the business of the entity. We can also refer to industry publications. So this industry publication include the government statistics from government websites, surveys, texts, trade journals, reports prepared by banks and securities dealers, and even from financial newspapers. So we can also check the legislation and regulations that can affect the industry of our client. We can tour or visit their plants and facilities. And we can also examine the documents produced by the entity such as annual report, tax returns, financial statements, and other reports produced by the entity. This understanding of the business of our client is part of what we call risk assessment procedures. So when we say risk assessment procedures, we perform this to obtain understanding of the entity and its environment, including internal control, and to identify and assess the risk of material misstatement at the financial statement level and assertion level, whether due to fraud or error. So in short, we have two objectives when we perform risk assessment procedures. So number one is to understand the business of our client, and number two would be to assess the risk of material misstatement. So the evidence involved in risk assessment procedures include inquiry procedures. So normally, the source of these inquiry procedures would be the management and those responsible for financial reporting. However, we can also ask other personnel from the entity to obtain supporting information from the responses coming from the management and those responsible for financial reporting. So we also perform preliminary analytical procedures as part of our risk assessment procedures, evaluating both financial and non-financial information, so to determine the plausible relationship among the financial items in the financial statements of our client. And finally, we have observation and inspection. So like for example, tracing the transactions through the system of our client, so to understand better how those processes work in relation, no, to the relevant financial reporting process of our client. So we'll discuss each of these steps in performing risk assessment procedures, starting with inquiry. As part of our risk assessment procedure, we inquire from the management and those responsible for financial reporting. So normally those responsible for financial reporting would be the accounting department of the entity or financial reporting department. So these officers, management, and the personnel involved in financial reporting are the ones directly involved in preparing the financial statements. However, we can also ask from personnel from other departments to obtain corroborative or supporting evidence on the responses of the management and those responsible for financial reporting. So, for example, we can discuss with those charged with governance, for example, the board of directors or audit committee, to help the auditor understand the environment on which the financial statements are prepared. We can also discuss with internal audit personnel to relate their activities concerning the design and effectiveness of internal control and whether management has satisfactorily responded to any findings of these internal auditors. Okay, so we can also ask or discuss with employees involved in initiating, processing, and recording complex or unusual transaction to help us auditor evaluate the appropriateness of selection and application of their accounting policies. So we can also ask in-house legal counsel who can relate matters related to litigation, compliance with laws and regulations, knowledge of fraud or suspected fraud affecting the entity, warranties, post-sales obligation, arrangement with business partners, and meaning of contract terms. And finally, we can also discuss with marketing and sales personnel who can relate the changes in the entity's marketing strategies, sales trends, or contractual arrangement with its customers. So to support, again, the responses coming from the management. So just take note that the major source or primary source of our information would still be the management. So sometimes in the CPA board examination, there would be question like what will be or who will be the primary source if the auditor wanted to know the status of litigation or something related to compliance of the company with laws and regulation, and the student would normally answer legal counsel. Okay, so remember, even if the information is about, let's say, litigation or compliance with laws and regulation, the primary source would still be the management. So the correct answer would be management. So the role of the legal counsel or in-house legal counsel would be supporting evidence, not the primary source of evidence, if we want to understand those, let's say, status of litigation or compliance of the company with laws and regulation. Okay, remember that. So another part of our risk assessment procedure is observation as well as inspection. So these activities may support inquiries from management and also to provide information about the entity and its environment. So activities involved in this procedure include observation of the entity's operations. So we can also inspect documents, records of the entity, such as, let's say, interim financial statements and internal control manuals. So we can also read reports rather, prepared by management and those charged with governance. So we can visit the entity's premises and plant facilities. So we can tour the plant or the facility of the entity. So we can also perform transaction walkthroughs. So transaction walkthrough meaning tracing the transaction or the process of the client from origination up to conclusion of that particular process. As for the required understanding, so we have to determine or obtain information about the following areas related to our client. So one, we have industry, regulatory, and other external factors, including the applicable financial reporting framework. So because this information can help us assess the risk of material misstatements that could affect our client's FS. So like for example, so entities or clients that are involved in complex industries may lead to higher risk of material misstatements compared to clients which are involved to lower risk or lower or less complex type of industries. Another is that some industries would have more stringent regulation that would lead rise to higher business risk compared to other entities. So for example, banks and insurance companies are highly regulated industries, so making them a riskier client compared to entities which are not regulated. So finally, for applicable financial reporting framework, so in the Philippines, the applicable financial reporting framework would depend on the nature of the entity as well as its size. So by default, we have the PFRS or the Philippine Framework for Reporting Standards or Philippine Framework for Reporting Standards that is prescribed by the Philippine SEC. But we also have PFRS for SME, PFRS for SE, and if ever the client is reporting to other country, so other reporting framework might also be applicable, like for example, US GAAP. So we also have to consider the nature of the entity, their operations, ownership and governance structure, the types of investments that they make, so the structure of the entity, whether for example they are standalone or part of a group of company, and capital structure. So are they, for example, highly leveraged? Do they have a lot of debt financing their operation, or majority of their financing comes from their shareholders? So we have to also consider that. So we also have to consider the accounting policies. So the methods on which the company account its significant and unusual transactions, how the entity account for transactions for which there are no established authoritative guidance or consensus, like for example, so what is popular today, like for example, cryptocurrencies. So if the entity would have an investment to those type, so we have to consider that in our understanding. And finally, we have changes to those accounting policies. We also have to understand the objectives, strategies, and business risk of an entity. So when we say objectives, so objectives are the over plans of the entity. So these are the status that they want, or these are the goals that the entity wanted to achieve. So strategies are the operational approaches or means to achieve those strategies set by the entity. And business risks are factors that may adversely affect the entity's ability to achieve those objectives. Okay, for example, product failure, lack of market, litigation. So those circumstances could prevent the entity to achieve their related objectives. So we also have to understand this risk to identify the possible risk on their financial statements. So but take note that not all business risks give rise to risk of material misstatement. And as auditor, we are not expected to assess all possible business risks that could affect our client. So normally we focus to those business risks that would have an impact on the financial reporting of our client. So another important factor that we have to consider is the entity's key performance indicators. So these key performance indicators or KPIs indicate to the auditor the aspects of the entity's performance that management and others consider to be of importance. So because these KPIs also are the means on how the uh, management are evaluated, so meaning their bonuses, their salaries, their promotion would depend on achieving or not achieving this KPI. So therefore, there is a certain pressure to achieve or surpass these performance measures on the part of the management, and therefore it tends to create an incentive, to the management to misstate the financial statements to achieve these certain KPIs. And then finally, we also have internal controls. So internal controls are established by the management to safeguard their asset, to achieve effective and efficient operations, to establish reliable financial reports, and to ensure their compliance with laws and regulations. And remember in our discussion of framework or foundation in auditing, so we mentioned that effective internal control could affect the risk of material misstatements in the financial statement. So because once the controls are effective, so it could reduce to the risk of material misstatement and vice versa. So if the controls are not effective, it can contribute to higher risk of material misstatement. Now, there's a lot of things that we have to understand related to our client's business. The next question is that how much understanding do we need to make? Okay? Now take note that our primary consideration in understanding the entity, their business, including their internal control, is whether that understanding that we have obtained is highlight sufficient to assess the risk of material misstatement in the financial statements and to design and perform further audit procedure. So meaning to say, it's not required for us to understand all the details about the business of our client. Okay? So what is important is that we have sufficient understanding to enable us to assess the risk of material misstatement related to the financial statements of our client. So there are some areas, for example, in business of our client, let's say operational area that would not necessarily be relevant in our understanding process. So because they are indirectly relevant or they are not that relevant on the financial reporting of the client. However, there are certain areas in the company's business that might have indirect effect on the financial statements, so we have to consider them also.